Hello, everyone. Welcome to the Hurley Investments Financial Services Commentary on Tuesday night, June 6, 2018. It is actually, June 5th. It is actually June 6th today. It's actually Wednesday. I'm a day off. I need to apologize to everyone. Yesterday, I got caught in some travels. Nothing like being stuck on a plane up in the air. No way to tell people that you're not going to be around. No way to cancel your financial commentary. Due to my schedule yesterday, I was unable to send out a notice, and I do apologize for all those that showed up and thought, heck, nobody's here. With that said, I'm glad to be with you tonight. It is Wednesday night. I really want to go over a couple things with you that I thought about as I'm looking at the markets and what's happening. But the first thing that really stood out to me that I wanted to go over, and I've had this conversation with a bunch of people, my market emotions are controlled by having the investing I do be a business. Control emotions equals business. And it's interesting because I'm going to use my kids as an example here. There are times my kids don't like people and they freak out and they tell them and it turns into a fist fight, and it's usually with brothers or sisters, and all hell breaks loose, right? We sit there and we're like, my goodness, I can't believe all this crap is going on as parents. I'm sure some of you have felt that way in business, in work, whatever it is that you do. You sit there and you're like, oh, I could just strangle that person. Yet you don't. You temper your emotions because of the business setting you're in, because it's your employment. Because if something were to happen where you just went off on the person, you could get fired. For me, I could lose their business. I could be so unprofessional that if I had one of these and became unglued and started to cuss and swear at other people and what have you, it'd get around and I would be out of business quicker than I wouldn't be. But also, because I treat it as a business, there's a certain amount of time that I spend doing my research and my work. Really, I think investing cannot be done as a hobby. There's too much risk involved with your nest egg, your retirement, that you can't trade for a hobby and truly expect to be successful. What I mean by that is that you have to come and I'll keep that one open. For me, I spend a lot of time on briefing.com. I spend a lot of time on CNBC, Bloomberg, and Fox News reading the news, but I spend a lot of time making sure I know my economic calendars, that I know, hey, you know what? Factory orders were down significantly in June, yet our market still had a pretty nice update, to be honest with you. Let's see if I'm going to go to my chart and make sure. Maybe my accounts had a pretty nice up day. It was slightly up. Wasn't anything to really brag about on Monday, but it was up, testing the 24,800 level. I had a good Monday. I enjoyed it, but it was a good day. We were muted on Monday because of our factory orders. It muted the opening on that day. And it's not like these are bellwether economic reports. It's not like it's the GDP, but this is the information that all the talk show hosts are going to mention in the morning. Tuesday, ISM services up 58.6, 0.6 higher I'm pretty sure it was 5 months in a row they were doing really good. It was an important job number to rebound us towards the end of the day on Tuesday. Mortgages, hey, we're positive for the first time in 3 weeks, 4.1%. Well, you should kind of expect that. If you do your research, we usually have a pretty good after the end of the month first mortgage index numbers. They're usually always positive because a lot of people cram the last of their closing on their homes and at the end of the month. Trade balance better by $2.6 billion. A less negative trade balance by $2.6 billion. Cost of doing goods going up. People's salaries are going up. Costs more to build pieces in production. Production was down a little bit. They're just little things that you start to pay attention to that do take up your time. I spend a lot of time reading in the morning. If I get up an hour and a half for the market, I'm up at 6 o'clock. I read what's happened while I was asleep. I read all kinds of news from multiple sources to get different points of view on what's happening in the market. I spend time, and I spent years now going through the Wall Street Journal's economic calendar. I have found out, and as I went through here, I am looking at what moves markets and what doesn't. Most of these are not important, but I did spend time with Singapore. I wanted to see the Singapore PMI composite, and I think it's right here. That's India. Let me go back. Don't want India. I wanted Singapore. Where is Singapore at? India. There am I. Singapore was on Monday. Kevin, why are you paying attention to Singapore? What is important about Singapore's PMI? Well, it increased to a 5.6 in April to a 56.8. Let me tell you that again. It increased from a 55.6 in April to 56.8 in May. It's the fourth increase in 5 years. I'm checking to see if the one China-Taiwan fight is affecting one of the huge capitalistic markets over there in Asia. I'm trying to see this contagion. With our fear from Italy, not that it's important, not that it moves markets, but you'll take a look at France's PMI. Where are we at? What's happening with Draghi? Notice the prior is 56.9. It's supposed to come at 54.5. Came in a little bit lower. Agribusiness activity is a little weaker than originally thought in May. Not significantly, but manufacturing sector is kind of coming down a little bit in France. I spent a little bit of information here looking at Germany. Their PMI composite. Well, believe it or not, it was a little bit better. Apparently, if Trump's going to do steel tariffs and there are no foreign cars coming with a huge tariff put on, especially from Germany, is it going to affect them? Hasn't yet. I'm spending my time going through and understanding as I look through all these that, hey, probably to move our markets, it's China's inflation on Friday. And then Japan machine orders might create some type of trend in the E-mini futures prior to Monday's open. It's funny, I miss and not paying attention to China's GDP. They haven't grown enough that it's been anything that's important. I've learned on what some of the bellwethers are, because not everything is a bellwether, but I spend my time putting into my investing as a business, and I've done it for years. It means I was poor for my first 3 or 4 years. Very poor, actually, as I was learning to understand the markets and what moves them. For that reason, I did find an interesting article, and it's 5 attributes of rocket ship startups. And I wanted to apply this to learning to trade, to understanding your investing, to any business that you start. You obviously have to have a lust for learning. You can't start a business, you can't be successful in investing or trading with truly spending some money on it, spending some money on your education, learning how to make this work for you in an education that's going to teach you what you need to do. I can tell you there's some very expensive ones out there, $25,000, at $10,000, that give you some good information. They also try to upsell you and give you a bunch of crap. I appreciate something that was streamlined. I looked for something that was streamlined, something that would make it simple to me, where I could ask a couple questions and these type of settings that would not necessarily fix, but that would put the pieces together for me. Competitiveness. You can't be okay with losing if you're investing. It doesn't mean you win all the time, but for me, I had to take a step back away from losing on spread trades and not adjusting correctly, because it made me an angry person. I had to adjust my style of trading where I could spread trade within the confounds of a collar trade. And that comes from being competitive. Resilience. You've got to be able to get knocked down and pick yourself back up. People that are successful in investing, successful in startup companies, successful in business, they're resilient, because the market will definitely beat you down. It's interesting. You have to be willing to take feedback. And I take some feedback from my, in all honesty, from my registered investment advisors that technically you could say work under me, but I do the best I can to treat them as equals. I do the best I can to talk to Michael Verdon and say, hey, what do you think? What's up? What about this? And he's rude enough. I hope he listens to this one. He's rude enough to say, hey, Kevin, you suck at that. You're reading that completely ass backwards. You're missing this, you're missing that. Keith's a little bit new to the whole investing, but I've seen this kid 2.5 years. He's spent a lot of time soaking up everything, to the point where I can ask Keith, hey, what do you think? What are you looking at? What do you see that you might worry about? Good to get feedback. I've got a friend that works for Goldman Sachs. A great source of feedback for me on the way I need to take a peek and look at what's happening in the markets and why. It's a way that's going to put me, how would I say it? It's going to put me in a position that I can make sure I'm not saying this the way I want to. It puts me in a position I can make sure that I don't get so complacent with our market sometimes that I would forget to not protect a position. That I would take the chance and say, you know what? I'm just going to let it go. I'm going to go ahead and I'm going to not give a crap about what I've been doing for the last 12 years. I don't want to get lulled into that false sense of, hey, everything's working just the way it's supposed to, so I don't need to work as hard. I don't need to study as hard. I don't need to read as much. I don't need to care as much, because everything just goes up anyway, and I'm going to be good to go. I don't want to get caught making that type of mistake that could cost me 20, 25, 30, 40, 50% of a portfolio in a month, in a week, in 10 trading days. That's not the person I want to be. And it's having these people that I get to work with that gives me the understanding of, hey, you know what? Kevin, what about this? Kevin, have you looked at that? Hey, Kevin, think about this, think about that. It gives me just a perspective that maybe I can respect enough to listen to, because there are a lot of perspectives out there, to be honest with you, I don't spend any time with. It's garbage. It's not worth spending the time on the crap that some people are peddling. So I don't. I don't spend the time doing that because it's not going to be helpful for me. I find it interesting that that becomes such a big part of what I do. But to earn my ability to take feedback from you, it's not easily given. In fact, very rarely is it given at all. It's just an opportunity for me to listen to other people and to have a couple of people that I work with and I know the most about help me keep my head where it needs to be, which it can be difficult. Unbridled ambition. This one speaks for itself. I want to be bigger. I want to be all that in a bag of chips. And because of that, I do spend some time. Well, I'm passionate about what I do. I'm passionate to the point where I'm going to defend the Hurley investment system, which is a collar trade, which is looking at not having protection on all the time. I can't afford to give up that kind of returns. It's about everything that encompasses what I do. I want you to take a notice here. You'll need to analyze the product itself, and I'm not going to pay attention to that. But it's pretty interesting because when you're looking at what you're doing for your business, what problems are you trying to solve? What are the biggest competitors and what are they doing differently? What are the biggest challenges and what are their future plans? And I kind of tacked this in there because it was not really part of the 5 points, but I thought it would be important for people to look at and to understand what they can gain from their competitors versus just being pissed off that they might be doing better than you are. It's a way to look at competitors without the bias against them that, they just suck. I hate them. Well, that doesn't help you with what you're doing. You're not going to be a better person by saying, you know what? I hate them. They bug me. You've got to find a way to be better than they are. You've got to find a way to be profitable. You have to find a way to maybe use a little bit of what they might be doing that that can help you in what you're doing. And so I just found it interesting that they have those comments there. Excuse me. I almost had a big sneeze there. When I looked at about today in the market, it's pretty interesting to see, as I was looking at my positions, a pretty good day, but I've got a lot of positions that are just going. So I thought I'd share with you, I'm just in Apple shares right now. Some people have thought, holy Toledo, how could you just be in Apple shares? There's too much risk. It's too volatile. It's looking at a chart. It's looking at our markets. It's being able to say, hey, you know what? If I take a peek, we still have some growth to the upside in a bullish Dow Jones Industrial Average. Not only that, we just broke above 25,000. Good thing I spell so well, huh? Hey, I'm in Apple. I'm okay with Apple because we still have some upside before we hit the 70 line on the RSI, and we now have a bullish S&P 500. Hey, the NASDAQ just went to overbought and bullish. But yes, we did have a month-long period. I'm going to highlight that for you. Obviously, you're going, well, Kevin, month-long period where we stayed overbought, where this index doesn't necessarily work like the others, where it's okay to be a little overbought in the NASDAQ. Pretty interesting. We are at all-time highs, but we've done it on the backs of earnings and the tax breaks. I'm okay looking at where our NASDAQ is moving, but looking at the two together, it really comes off of a bounce off of the 50-day simple moving average. And we also just breaking above. Tomorrow's going to be a big day on Thursday. Interesting to see the futures are up right now. But are we going to go capture that 2,800 or is that resistance? We didn't get up to the 2790-ish. So we got about 8 points up tomorrow. Hey, let me take that back. 18 points up tomorrow. 28 to hit that 2,800. So we still have some movement up there, which means I never got my volatility. So I'm sitting in some Apple shares. I've got American Outdoor Brand shares that I'm sitting in, waiting for things to come back, moving positive. Bank of America finally starts to move above 30. Boy, I'd like to see that get back up to 33. Big talk on Bloomberg and CNBC, how the banks haven't participated yet. Kind of interesting if you were to take a look at a chart on Bank of America. And I'm going to pull it out a little bit. Why haven't I done so much? I haven't shorted more calls. We're just breaking above the 50. Tomorrow will be a big day. But more importantly, if I fill this chart and stretch it out to like 5 years, look at the runs you get. September, August, all the way up last year. September, October, all the way up last year. In 2016, look at this July to December run. Hey, we had a September to December run, an October to December run, a July or an October, November to December run. We have these runs that allow me to be okay with where I am at and to a certain degree holding off to where I'm at until October. Well, can't you make a reason then that says, hey, maybe you should, I don't know, put a covered call on? Maybe. But I'm not going to. I think we'll have a big run where you could see Bank of America as high as 40 by the end of the year. And I'm sticking with what's working right now. Bank of America has worked, has not worked as nice as I wish it had, but it is working. Baidu, I've got all kinds of stuff happening on Baidu. The short answer is nice to see it rebounding on some short puts that I have out there. Just in Disney shares, some people asked, do you want to protect Disney? I'm not in it. Facebook with some volatility. I was able to sell some 200 calls, get some nice credit for a 7-week period of time. I'm in Freeport McMoran shares, a Google call vertical, deep in the money one, looking good. I don't need to put that one out there. Altria shares, come on. There we go. I got the Altria shares are there. Marvel on a covered call. Under Armour's going to get called out, I hope. It's pretty interesting to take a peek at some of these positions and where they're at. Unbelievable movement, still looking good. Visa, a bunch of Visas looking good. Zion's covered call out in time. When's my Zion's covered call at? October 60. I can let some things run a little bit, but I'm letting them run based off of my stock charts, based off of the fact that, you know what? Not a whole lot's happening this week. It's like a breathing week. I kind of like it when not a whole lot's happening. I think our markets are going to continue to end higher. I thought this on Tuesday. We've moved off on Wednesday. June. I would have told you we'd be down in June. I'm looking at where we're heading up here at the start. I'm not ready to say in the first week that we're not going to be, but I'm really anxious to switch this from a negative 2% to a positive 2%. Don't have a whole lot by way of earnings that's coming up. Don't have a whole lot by the way of economic reports. China, PPI, CPI data coming up. I still am looking to add some short calls, but I am also aware that we're going to run into some earnings starting in July. So I am looking to add some short calls with some bigger credit, but I'm going to do it hopefully at a much higher high than I was looking at 2 weeks ago. The VIX never gave me that pop above that 20 that made me worry. When it makes me worry, I know I'm going to get a nice credit on the covered calls. As by way of what I have for you, pretty interesting article on Visa. I disagree with his valuation metrics. He's off a bit, but I do like the opportunity that it has to be some upside potential here. He's missing how much upside potential can happen with with Visa and the growth in Visa Europe that they bought. Some interesting key drivers. Where was the one I thought was really interesting? Was about the global transactions. Just how dominant Visa is as people are moving more to cards. As we're going to get back into obviously the huge consumer credit. If you want to look about identifying Visa and its investments before taxes and all that kind of stuff, this is great information to learn valuations on a company that I trade. What else do I have? One key image that keeps Walmart up at night, here's what the company is doing about it. It's really going through what was popular 20 years ago, 50 years ago, and what's gone or out of business today. Interesting to see the difference between 20 years ago and today. It was an interesting article that I thought a good way to look at, in all honesty, how Walmart is looking at their business. I have a lot of pictures in here that I thought was very interesting. A Walmart robot that's going to scan shelves and be more specific on maybe how much inventory is needed instead of bringing out pallets of stuff. A conveyor belt in the back to speed the unloading of the trucks. Store maps. It's like we already know the milk's in the back. But a store map to point out other things that you might be interested in. I would really like to see a Mobile Express return. I do think if you have a Mobile Express return, though, you will start to lose more money as people return some garbage to you. Revamped entertainment section. Hey, they're going to put some things that are more expensive out there. I found it a very interesting article to see how Walmart looks at keeping their business viable. And then please read David Stockman. He puts stuff out every single day. he's been calling for the big drop, and it's probably not going to happen here in the near future. But the numbers that he's looking at and some of the comments he brings out, again, keep that complacent trader going, you know what? I need to spend some time here. I need to spend some time understanding the huge risks that are in our market, what those risks are, dollar points on the $75 per share on the S&P, the 1600 level on the S&P. Go through and understand why some of these levels are important. And it's going to see you the risk that's in our market right now. And of course, look at Apple. I can't wait till Apple becomes the first $1 trillion company. I thought it was going to be years ago, and then I thought, oh, Google's going to beat it. ExxonMobil's going to beat it. Walmart will come out of the blue. Amazon might do it. Finally, I would really like to say finally, I'd like to see Apple just achieve that first $1 trillion company. They have had the WWDC conference going on this week. Pretty interesting. If you do follow Apple, it's nice to see Apple not be one of those companies that is apologizing for what they do, apologizing for the Facebook faux pas that's going on. Apple's not apologizing for anything. In fact, they're already putting into their ISO more protection for the consumers so that you don't have to have those type of issues occur with you. It's really neat to see the way Apple is running Apple like they've always run Apple. All right, what else do we have here? I think that's it. So that's it. I'm going to get this off and emailed out to you guys. Again, I do apologize for missing your Tuesday night. 100% me not managing some travel time appropriately. So I do apologize. That really comes down to me. I would like to be able to blame it or excuse it on something else, but it's just the way I manage my time. I knew what was going to happen, hoping that it wouldn't. Just taught myself once again, you never trade on hope, and that I missed it. I'm sorry. Won't happen again. But guys, appreciate you guys. Look forward to seeing you next week. I will be around next week, but the week after I will be at a Boy Scout summer camp for a week with my scouts and my group. So I will miss a week, but I'll keep you posted on it. Guys, have a wonderful day tomorrow. Let's see if our market can't continue for a fourth day in the row to the upside. And I will talk to you again next week. Bye-bye, everyone.